So we start on the daily time frame and use these key levels for the lower time frames and for finding entries. So we have, because we are focusing on Thursday's price action and we are not discussing the Friday breakdown here that was caused by Trump, we're only focusing on the Thursday's price action and the levels and the trades I had on that specific day. So we have this previous candle. We are going to take the wick and the body and note the quadrant levels. So we have this wick in here divided by the quadrant levels, 50% for the midpoint, 75% for the upper quadrant, and 25% for the lower quadrant. And those levels, we don't change them on the lower time frames. We just simply have them on our chart and combine them with lower time frame PD arrays or timings and then entry models. On our chart, we can see we have a balanced price range, and that balanced price range is inside a discount range. So we have a discount array. We take this swing low to this swing high. We have midpoint right about here, and everything below that is discount. So if price goes into that range, we want to see sensitive price rejection there to move into and towards the drawn liquidity and the bias. In this case, we have the balanced price range because we have one single candle to the downside and one single candle to the upside. This makes a balanced price range and not only a fair value gap. Like if you only have one candle to the upside, leaving a fair value gap like this one up here. And this one balanced price range is very, very sensitive, um, especially in the discount range when you are bullish. And you can see it trades into that here. Nice wick on this, nice rejection. Also on the quadrant levels on the daily chart, and then continue higher prices. Now we're on the 15-minute chart, and we're looking for further things that are used as a confluence on those higher time frame levels. So we don't only have the daily wick in here, that can be also used on the smaller time frames on the 1-minute chart for entries, for narrative, for specific continuations, or closing prices like this one here. See that the 15-minute, this down close candle after we trade above it here, taking the sell side, closed right about that 25% level on the daily chart. Opens there and then continues higher. Those are things you want to notice on those specific key levels. Then we have the 15-minute fair value gap here. That's in the upper half of the balanced price range. So we have a lower 15-minute fair value gap here and an upper here. Both are inside the discount range. But why we choose this one? First of all, we have a swing low here. So that swing low has size liquidity pool. A fair value gap just below a size liquidity pool or a fair value gap just above a buy side liquidity pool is high probability. And in this case, because we have the logic on the balanced price range, we want to see it go there, be sensitive, and continue higher. This this fair value gap here on the 15-minute is now a confluence to this balanced price range on the upper half. So it has more sensitivity here on that specific area to then continue higher prices, especially with this swing low and these lows in here having sales at liquidity pool. Now we're going to focus more on the liquidity pools, and I noticed them mostly on the 15, 5-minute, and 1-minute chart. In this case, for example, once we have price action being here in the PM session, we have a sell side liquidity pool on the AM session. We do have a buy side liquidity pool in the AM session, or rather in the lunch hour here. And then we have a buy side liquidity pool just before equity open. So it's leaving buy side in here. And this one is the all-time high. So we are trading towards the all-time high, but try to finish the move, first of all, in time. And we will come to that in a minute. But also at those buy side liquidity pools, because these are high probability, they're relative equal, and we are aiming for those. So price takes out the sell side liquidity pool here, has nice rejection here on the 0% wick on the daily chart. It's basically the body open from the daily candle. Trades there, and then trades towards the buy side here in the PM session. And 4 p.m. is what we have as a close, basically. And then after that, we can see it continues higher in the Asia session towards this buy side up here. Now on the 5-minute chart, we see these relative equal highs more clear, and especially these ones, they are smooth. And smooth edges are going to be disrupted, price is going to trade through them and through them, especially because we have retail traders. And these retail traders are trusting those equal highs and equal lows as support and resistance. So they have their stop loss orders just above those swing highs and just below the swing lows. In here, you can see the equal lows down here. Price trades away from it, thinking that retail is trusting that support level and then continue high prices into a resistant level. So they have their stop loss orders just below the lows here. Price takes out this, and then there's a nice market structure shift on this swing high here. So we have a 5-minute swing high. A shift here, market structure trades once more into that body from the daily chart, and then continue higher prices. And on the 1-minute chart, we can see the buy side and sell side liquidity really, really clear in here. Once we approach the PM session, you can see how the lows are jagged in here, trading into these discount areas, higher time frame, and then have a really nice market structure shift here with a breaker, because we have a low, high, lower low, breaking above that, Beverly gap, also a key level. This is the daily candle opening price. If we now add another key level to it, and we have that with the first presentations, and I have many videos already on that specific thing, especially on all the key levels I use. You can find that video on the top right corner. But you can see how the first presentation here is very, very important. And this one up here. Those are old first presentations. I don't know from what day these are. Normally I have them for 5 days. So these two first presentations are from previous 5 days. And you can see how price trades away from it and then uses it again as a key level combined with that black line in here. Trades into another first presentation, but we want to see it trade the buy side. So this move here is something we can also have into our narrative. It only trades to this sell side liquidity pool here, takes it out. This blue line on the daily chart is a 25% from the wick, trades higher, leaving a busy here of a belly gap and the first presentation. So once we trade above it, we can use that narrative in here again with inversion of a belly gap here on this side, and then continues higher into final target up here. We also have time points and time windows. For example, we have the midnight opening price here, that blue line, and that is coming from the opening candle right about midnight. So that is something we use as a time point. It's only one specific time in the chart. Like for example, the AM session start, it's 9:30. That's a time point. The lunch hour start and the PM session start. So these are time points. Time windows would be the AM session from 9:30 to 11:30, lunch hour from 11:30 to 1:30 p.m. And then we have the PM session from 1:30 p.m. to 4 p.m. Not only these as a time window, but we also have the macros. And I did a video about macros already. And these are 20-minute time windows. But in the PM session, you also have not only 20-minute time windows, you have a 30-minute time window and a 15-minute time window as well. And these are very, very nice to trade and to find setups in. So in here, we have everything we need. We have, first of all, the key levels down here from the higher time frame. We have the daily levels, the blue and red lines in here. We have the sell side and buy side liquidity pools. We have the higher time frame bias. We have everything we need for the 1-minute chart and 15 or even 5 seconds chart. Now it comes to finding an entry. And that is also based on time, but also based on what price did earlier as a narrative. So in here, we have, for example, the lunch hour. AM session did only trade lower in here. I did not engage in this, but then I saw these equal lows in here. I also saw the equal high. But because we are bullish, we want to see it trade into sell side liquidity first and then continue higher prices. So that would be the manipulation to the downside, knocking out the retail traders who are already long, and then the real move happens into the buy side liquidity without any retail traders. This short setup in here is based on a SIBI, this one. So it's a fair value gap that is used for bearish prices. Then we have the sell side liquidity here as a target, and we have another SIBI here. that is used as a pyramid. And it's inside a macro. I already did a video about this, but this short explanation, we have a consolidation right before the macro, and then I want to see some kind of movement into sell side or into a specific imbalance. And because we have three imbalances here, we have the first presentation, we have the fair value gap from the 15, and we have the balanced price range from the 1 hour chart. Price is going to trade here into, oh, we're going to zoom in, and this is why the key levels are important. First of all, we have a first presentation here, also an old one. Might be from a few days ago. Price trades below that, inside the macro, trades higher into this CB, basically this, into this CB. There is a volume imbalance, and we have a balanced price range here again. So it trades into that. Not only these key levels or PD arrays, we also have that 50% line from the previous daily wick. It trades into that here, and I'm entering on that rejection. Trades lower. It takes out this low in here, but leaving the CB and not taking out this asset on here. So I can position myself again into it here as a pyramid and then write it down into the full target. Perfect execution, perfect entry model. It's just a continuation model, nothing else, with the right narrative, the right timing, and the correct key levels. Now it's already going into the discount arrays in here. And the next time window or time point I'm watching is 1:30 p.m. because that is the starting point of the time window for the PM session. Inside that time window of the PM session, we have 4 different macros. We have the 150 to 210 macro. We have the 250 to 310 macro. We have the 315 to 345 macro. And we have the MOC macro from 3:45 to 4 p.m. So these macros are really, really important and the best thing you can use in the PM session for narrative, for finding the correct movement, the right drawn liquidity. Everything is based on that. First of all, we have the lunch hour having visor liquidity pools. So 2 relative equal highs in here and 2 relative equal highs here. Both of these visor liquidity pools are based inside a macro. We have macro liquidity, and that is a very, very high probability. Price trades into all the lows in here. So we have a jagged and a 3D rise pattern in here. Makes the market such a shift based on time, right after 1:30 p.m. So we have a small U swing to the downside into that fair value gap again, then forming a breaker and fair value gap. I did enter here already on the 25% level of this daily wick and on this breaker here. Because we have a low, high, lower, low, you can also use this breaker here, even though it did not trade above that. But I'm using that logic of this breaker to then continue higher prices. And I'm entering here on that fair value gap here as a pyramid. It then trades. I had my original stop loss right about here, 15. This just below the first presentation midpoint. Using this breaker, the high and upper half for a rejection, and this daily candle opening price, the black line in here. Price trades once more into that busy consolidation inside this macro. So we can see some kind of movement. And I could have re-entered here as well, and then trades higher, see some movement, goes into the buy side here and here, trades into the 50% of that daily wick, re-entering here on the busy, looking partially here at the first presentation and above this high, trades lower into the 25% level again, consolidation inside the busy here. So what is something we want to see after the consolidation based on time? We want to see some kind of movement, expansion. Trades higher here inside the macro, another re-entry here on the busy and the first presentation. So nothing's random here. Like the key levels are so useful, especially as a confluence for your entry. And you don't want to miss out on this. You can have an entry. You can have an entry model that is consistent, but if you want to pyramid, and if you want to have the best entries, match them with these key levels. And don't miss out on them. Then the last hour macro and the MOC macro, they are going to hunt for liquidity that is not traded to yet. And based on that time, we have the buy side up here and the buy side up here. So it only makes sense to trade up into those buy side liquidity pools, nothing else. It does not make sense to trade down here, down here. The lows are taken, the narrative is there. We are trading with a higher time frame bias, and we have these liquidity pools inside the macro. So this makes it even more high probability. And then price trades towards that, partial here on this target, and then the full TP right about the buy side liquidity pool. And then the MOC macro goes into consolidation, nothing more, because the job is already done on the last hour macro. So that is basically it. One of the easiest strategies you can have is based on these macros, liquidity and key levels. It's nothing else, nothing else. You have timing, you have key levels, you have liquidity pools. That's it. If you combine all these together, you will make enormous amount of percentages. Yes, it's a paper trade account, but it's something I teach through, and I don't want to give financial advice. I don't have the right to do it. I'm teaching through paper trading, but in my mentorship, I also show real executions. So on either funded accounts, challenge accounts, or whatever. And students are already trading on funded accounts. I did my work on showing this is going to work. And I'm calling these levels, for example, the buy side up here, before it even goes there. And then show the executions based on what I did and what I said. So it's there, you can see it. And this is something I am doing a training on for the Robbins Cup. I want to do it in 2027 and then make minimum top 3 and attack for the top 1. And you can see we started with 100K 4 months ago, and now we are at 2 million. So this is a gain of 1,955%. If you go to the account history, you can see everything is consistency. Yes, there are some losses, but everything is consistency. We started here in June with 100K, 16% here, and then grinded myself up into the 2 million mark. And it's just consistency with these type of entries. You're only focusing on timing, key levels, and the liquidity pools. Nothing else. Nothing else matters. If you find consistency in this, you are going to make a huge gain and have a huge advantage. And you can see in here, I'm consistent. I'm trading AM session and PM session, nothing else. And you can see there are no more trades before that because it's a December contract and we changed that in the end of September. If you look at this here, you can see the symbol NQZ. If you go down a little bit, you can see NQU. So it's a September contract. And we started in the NQM, so the June contract. So I'm switching from contract to contract, obviously, because we are trading futures. But you can see I'm only trading AM session and PM session, nothing else. And I even got the short here, from here to here. The size of liquidity was. So really, really nice. I hope you liked it and you learned something from this. Because if you trade like this, nothing can stop you. Literally nothing. And nothing will change in the future.